everyone. Let's depart from our usual and have a look at a few companies that are worth your examination. These are volatile and risky areas and are very different from what we normally discuss. But for capital you can put at risk, perhaps you should study up on some of these. But the question came up, so let's have a look. So these are our favorites around the AI craziness that's going on. We've taken very small positions because we don't want to get caught up in the hype around artificial intelligence and technology. The ticker symbols are NVDA, ESTC, SNOW, PLTR, and SMH. The companies are NVIDIA, Elastic NV, Snowflake Inc., and Palantir Technologies Inc. And to round it all out, there's the Van Eck Semiconductor ETF, whose symbol is SMH. Again, these high flyers are risky, and we definitely aren't recommending you get involved with them without considerable research. With that, let's see if the team is ready to add their comments. You good to go?
You bet. Let me share some insights into a riskier part of our investment portfolio, which focuses on technology and growth-oriented stocks. While this segment represents a relatively small percentage of the overall portfolio, it holds significant potential due to its alignment with transformative industries and technologies. Each of these represents a unique area within the broader tech landscape, and today I'll dive into the specifics of their business models, strengths, growth potential, and associated risks. Let's begin with NVIDIA Corporation, a name that needs no introduction in the tech world. NVIDIA has established itself as a leading player in the design and manufacture of graphics processing units, or GPUs, as well as AI technologies. Its influence extends across multiple high-growth industries. In gaming, NVIDIA GPUs are celebrated for their performance, driving demand for immersive experiences in gaming, esports, and virtual reality. In the data center space, NVIDIA provides advanced computing solutions for cloud computing, AI-driven analytics, and machine learning. Their GPUs and frameworks are integral to AI research, powering innovations in autonomous vehicles, robotics, and the rapidly expanding field of generative AI. NVIDIA's reach doesn't stop there. The company supplies advanced tools for professional visualization in industries like media, entertainment, and design. Additionally, it's making strides in autonomous vehicles, offering AI-based platforms and computing systems to vehicle manufacturers. Why invest in NVIDIA? First, it is a market leader in GPU technology and AI solutions, both of which have exponential growth potential. Second, NVIDIA is diversifying its addressable market, exploring areas like AI, data centers, and self-driving technology. It also boasts strong financial performance, consistently demonstrating revenue growth and adaptability. However, potential risks include competition, regulatory challenges, and the cyclical nature of the semiconductor industry. Next is Elastic NV, a company that focuses on search-powered solutions to help users find, analyze, and visualize data. Elastic is best known for its Elastic Stack, an open-source software suite that includes Elasticsearch, Kibana, Beats, and Logstash. These tools empower organizations to search, monitor, and secure data effectively. Elastic serves diverse applications, including enterprise search, enabling businesses to build tailored search experiences. Observability, where its solutions help IT teams monitor system performance and resolve issues. And security, providing tools for threat detection and response. Elastic's business strategy emphasizes a cloud-first model, which has boosted its recurring revenue. Its open-source origins have also created a broad user base, many of whom convert to paid subscriptions as their needs grow. Elastic stands out for its versatility, addressing needs across industries such as technology, finance, healthcare, and government. That said, competition is a key challenge, particularly from other observability and security providers. Elastic's long-term success hinges on its ability to convert free users into paying customers and maintain its innovative edge. Now let's discuss Snowflake Inc., a company at the forefront of cloud-based data solutions. Snowflake's data cloud architecture allows organizations to manage, store, and analyze vast amounts of data efficiently. Its core offerings include data storage and warehousing, which supports structured and semi-structured data, and data sharing, which enables secure collaboration without the need for data duplication. Snowflake's integration with major AI and machine learning tools further enhances its analytics capabilities, while its cloud-agnostic design ensures compatibility with platforms like AWS, Azure, and Google Cloud. Snowflake operates on a consumption-based pricing model, which aligns customer costs with actual usage, providing flexibility. The company's strengths lie in its massive addressable market within the growing data and analytics space, its strong customer base, and its high revenue growth driven by both new clients and expanded usage by existing ones. However, Snowflake faces fierce competition from native tools offered by major cloud providers and remains unprofitable, which presents risks for valuation and execution. Moving on to Palantir Technologies, this company specializes in big data analytics and decision-making solutions. Its platforms, Palantir Gotham for government clients and Palantir Foundry for commercial clients, integrate and analyze massive datasets to extract actionable insights. In the government sector, Palantir is a trusted partner for defense and intelligence agencies, providing tools for counterterrorism, surveillance, and logistics. In the commercial sector, Foundry supports complex decision-making across industries like healthcare, finance, energy, and manufacturing. Palantir also offers Apollo, a platform that automates software deployment and maintenance across diverse environments, enhancing scalability. The company's advantages include its strong government contracts, which provide a stable revenue base, and its ability to embed deeply within client operations, creating high switching costs. However, Palantir's reliance on large government deals and the challenge of scaling to smaller clients are factors to consider. Finally, let's discuss the VanEck Semiconductor ETF, SMH. This ETF provides investors with targeted exposure to the semiconductor industry, which lies at the heart of modern technology. SMH tracks the performance of the MVIS US-listed Semiconductor 25 Index, covering key players like NVIDIA, Taiwan Semiconductor Manufacturing Company, Advanced Micro Devices, Intel, and Broadcom. It offers diversified exposure to companies involved in chip design, manufacturing, and distribution, as well as a mix of domestic and international holdings. Why consider SMH? The semiconductor industry is a critical enabler of technology, powering everything from AI and cloud computing to electric vehicles and smartphones. SMH provides diversification, reducing the risk of relying on individual companies, and includes market leaders driving innovation. However, the industry is sensitive to economic cycles and geopolitical risks, especially in the context of U.S.-China tensions. In conclusion, these holdings, NVIDIA, Elastic, Snowflake, Palantir, and SMH each represent a distinct and compelling opportunity within the tech sector. They align with transformative trends shaping the future, from HEI and data analytics to semiconductors and cybersecurity. However, investing in these areas requires a clear understanding of the associated risks, including competition, profitability concerns, and market volatility. By staying informed and focused on the long-term potential, we can position ourselves to benefit from the extraordinary innovations driving the tech industry forward.
That is a lot of information. And these companies have plenty of competition. So before you invest, do your research. And before you go, please like and subscribe. Thank you.